Hey everyone, welcome back to Corporate Decoder, the place where we dive into the juicy details hidden inside company reports and try to figure out how much platinum is actually worth keeping track of. So today we are looking at the GraniteShares Platinum Trust's latest Q report, and let me tell you, it is all about platinum, its price, and how much of it this trust holds. If you like seeing how raw materials translate into financial statements, this is for you. Before we dig in, if you are all about cutting through the corporate jargon and getting straight to the point with financial filings, you should definitely subscribe. And hey, we have a growing community on Discord where we break down these reports even further. The link is in the description below, so come join the conversation. Alright, this is a quarterly report on Form 10Q. Think of it as a check-in for GraniteShares Platinum Trust. They are reporting for the period that ended on the 31st of December 2025. They've got this commission file number, which is like their official government ID. It helps keep track of them. The name of the company itself tells you what it is all about. GraniteShares Platinum Trust. Now this is interesting. As of early February 2026, they had nearly 14 million shares of the trust out there. That is how many pieces of this platinum pie investors own. Their shares trade on the NYSE Arca Inc. under the ticker symbol PLTM. So if you want to buy a piece of this platinum trust, that is where you'd look. Now we get to the really good stuff, the financial information. This is where we see how the trust is doing with its platinum holdings. This is like a snapshot of what the trust owns and what it owes at a specific point in time. We're looking at two dates here, the 31st of December 2025 and the 30th of June 2025. So all these dollar amounts are in thousands, which is pretty standard for these reports to keep the numbers tidy. The biggest asset they have is their investment in platinum. It is valued at its fair value, meaning what it is worth on the market. At the end of December 2025, this investment was worth a massive $233,901,000. That's a huge jump from $85,235,000 back in June 2025. This tells us that the price of platinum likely went up quite a bit during that period. Their total assets were $233,901,000 on the 31st of December 2025 and $88,487,000 on the 30th of June 2025. Again, a big increase, driven by that platinum value. On the other side, we have liabilities. These are what the trust owes. They had very few liabilities, just $77,000 at the end of December 2025, and $3,281,000 at the end of June 2025. This is good. Low liabilities mean the trust isn't carrying much debt or obligation. This is the real value of the trust. It is total assets minus total liabilities. On the 31st of December 2025, the net assets were $233,824,000. That's up from $85,206,000. This means the value of the trust significantly increased. And here is how it breaks down for investors. They had 12 million shares outstanding at the end of 2025, up from 6.55 million shares in June 2025. This means more people bought into the trust or created new shares over that period. This is key for investors. It is the net assets divided by the number of shares. The net asset value per S-share was $19.49 at the end of December 2025, a big jump from $13.01 in June 2025. This shows a pretty good return for shareholders during those 6 months. Now, a quick note on cost. The cost of the platinum they hold was $159,805,000 at the end of 2025. The difference between the cost and the fair value, $233,901,000, is that unrealized gain we talked about earlier. It means the platinum they bought is now worth a lot more. This section gets more detailed about what they actually hold. At the end of December 2025, they held 115,392.740 ounces of platinum. That is a lot of platinum. And remember, the value of that held platinum was $233,901,000. This represented 100.03% of their net assets, meaning almost all their value is tied up in platinum. This little line item shows the net liabilities, which were very small. Now let's look at the 30th of June 2025. They held 63,137.357 ounces of platinum, valued at $85,235,000. So they almost doubled the amount of platinum they hold, and its value more than doubled. This statement shows their income and expenses over a period. We're looking at the 3-month periods and the 6-month periods ending the 31st of December 2025 compared to the same periods in 2024. The main expense here is sponsor fees. These are fees paid to the company that manages the trust. In the 3 months ending December 2025, these fees were $195,000. For the same period in 2024, it was only $55,000. For the 6 months ending December 2025, it was $312,000 in 2024. As the trust grows and holds more platinum, these fees naturally increase. Because of these fees, for the 3 months ending December 2025, they had a net investment loss of $195,000, and for the 6 months it was $312,000. This is just the cost of running the trust. Then we have realized gains and losses. They had a gain of $44,000 from selling platinum to cover expenses in the 3 months ending December 2025. For the 6 months, it was $67,000. They also account for gains from distributing platinum when shares are redeemed. They had a gain of $444,000 in the 3 months ending December 2025 and $581,000 for the 6 months. These gains offset some of the fees. This is where the big numbers really come in. The net change in unrealized appreciation, which means how much the value of their platinum holdings went up without them selling it, was a massive $38,889,000 for the 3 months ending December 2025. For the 6 months, it was a staggering $54,623,000. This is the main driver of their profit. So, putting it all together, for the 3 months ending December 2025, the trust saw a net increase in its assets of $39,182,000. For the 6 months, that increase was $54,959,000. This shows a very profitable period for the trust, mainly due to the surge in platinum prices. And, per share, that translates to a $4.12 increase for the 3 months and a $6.67 increase for the 6 months. This is the actual gain an investor would see. The weighted average number of shares outstanding also increased significantly, which makes sense as the trust likely saw more creations of shares as investors bought in. This statement shows the movement of net assets. We see the starting net assets, then additions from share creations, subtractions from redemptions, and the net increase or decrease from operations. In the 3 months ending December 2025, they had creations of 3.55 million shares, and in the 6 months, it was 5.6 million shares. This is a substantial increase in the amount of shares issued. Redemptions were much smaller, meaning more people were buying into the trust than selling out. The net assets at the beginning of the period, for example, the 30th of June 2025, were $85,206,000. By the 31st of December 2025, they had grown to $233,824,000. That is a massive growth, more than doubling the trust's value. This section breaks down the performance on a per share basis. At the start of the 3-month period ending December 2025, the net asset value per share was $15.12. By the end of the period, it rose to $19.49. The unrealized gain on platinum really boosted that per share value, showing a gain of $4.39 per share for the 3 months. So the net asset value per share doubled from $8.83 in December 2024 to $19.49 in December 2025. For the 6-month period. That's a huge gain for shareholders. The total return ratio for the 6 months ending December 2025 was about 49.81%. That is a nearly 50% return on investment in just half a year, which is phenomenal. This part of the report explains how they do their accounting. They are following us generally accepted accounting principles. Here they explain how they value the platinum. It is held by a custodian, which is a bank, and its value is based on the London Bullion Market Association Platinum Price PM. This is the market price. Level 1 inputs are used when they can get real-time prices from active markets. This table directly shows how they value their platinum. For the 31st of December 2025, their investment in platinum was valued at $233,901,000, and it is all categorized under level 1. This means its value is based on readily available, unadjusted prices in active markets. There were no level 2 or level 3 inputs, which means they aren't relying on indirect observable data or their own assumptions. And for the 30th of June 2025, the platinum was valued at $85,235,000, also entirely in level 1. This makes sense for a widely traded commodity like platinum. This section talks about their expenses. The main expense is the sponsor's fee, which is 0.50% of the trust net asset value per year. They also mention that the sponsor has agreed to cover other administrative and marketing costs like trustee fees, custodian fees, listing fees, and legal costs up to a certain point. This is a common arrangement to keep the trust's operating costs low for investors. At the end of December 2025, the fees payable to the sponsor were $76,745. This is a detailed look at their platinum holdings. Here we see the changes in ounces of platinum. As of the 30th of June 2025, they had about 63,137 ounces. By the 31st of December 2025, that number jumped to over 115,000 ounces. The platinum contributed line shows that new platinum was added, likely through share creation. They contributed over 53,000 ounces during that period, and the change in unrealized appreciation for this period was $54,623,000. Which is again that massive increase in value. This section confirms the relationship with the sponsor and trustee. It reiterates the fee structure and the sponsor's role in covering expenses, and the fee paid to the sponsor is 0.50% of the trust's net asset value. This is a crucial section, concentration of risk. It states that the trust's sole business activity is investing in platinum. This means their entire value is tied to the price of platinum. It lists factors that can affect platinum prices like global supply and demand, production costs, industrial use, jewelry demand, and even currency exchange rates. This highlights that if the price of platinum falls, the trust's value will fall proportionally. This is the management's own discussion about the company's performance. They explain that the trust holds platinum and issues shares in exchange for platinum and redeems them with platinum. Here they explain how they calculate the net asset value or NAV. It is done daily after the market closes using the LBMA Platinum Price PM. They subtract all expenses and liabilities from the value of the platinum. They state that the trust has no significant liquidity needs because the sponsor covers most of the expenses. The trust doesn't hold much cash, relying on platinum for its operations. Management discusses the quarter. They point out the net asset value increased by 80.9% in that quarter, primarily driven by the price of platinum. They specifically mention the platinum price jumping from $1,571 to $2,027 during the quarter, and the number of shares increasing. This confirms our earlier observations about platinum's price surge and increased investor interest. Looking at the full 6 months, they note a 174.4% increase in net asset value. Again, the platinum price was the main driver, going from $1,350 to $2,027. They again highlight the unrealized gain of over $54 million as the primary reason for the net increase in assets for the 6-month period. This section discusses their internal controls and procedures to ensure accurate financial reporting. It is a standard disclosure. This part covers various other items. They refer back to the risks mentioned in their prospectus. This is important because it signals that while the trust performed well, there are still significant risks involved, mostly tied to the volatility of platinum prices. This is about share activity. They discuss redemptions. For the period ending December 2024, they show the redemption of 2 baskets, which equals 100,000 shares. This tells us about the outflow of shares. Finally, the exhibits list is where you find supporting documents. This includes important certifications from their CEO and CFO regarding the accuracy of the financial statements. And here are the signatures confirming that the appropriate people have reviewed and signed off on this report. Well, what can we say about the GraniteShares Platinum Trust's Q report? The story here is pretty clear. Platinum prices went through the roof, and this trust, which is essentially just a holder of platinum, saw its value soar. On the positive side, the trust's net assets nearly tripled from June to December 2025, and the net asset value per S-Hair saw a substantial increase of over 60%. Within that 6-month period, shareholders who were invested at the beginning of this period saw very healthy returns, driven almost entirely by the appreciation of platinum. The fact that their platinum is valued using level 1 inputs, meaning current market prices, shows transparency, and the management's agreement to cover most of the trust's expenses beyond a small percentage fee is good for investors as it keeps operational costs down. However, and this is a big however, the concentration of risk section is critical. This trust is 100% exposed to the price of platinum. While that was a massive win in this reporting period, a sharp downturn in platinum prices could lead to equally dramatic losses. Their total return ratio in the prior year, for example, was negative, showing the volatility. They are not a diversified company, and their success is fully dependent on the commodity markets. So, while this report shows incredible gains, investors need to be highly aware that platinum is a volatile asset and a significant drop in its price would directly and severely impact the trust's value. In conclusion, for the period ending December 2025, The GraniteShares Platinum Trust had a stellar performance, making its shareholders a lot of money due to the surge in platinum prices. But remember, with such a focused investment, especially in commodities, comes significant risk. It's a high reward, high risk play. Alright, that is our breakdown of the GraniteShares Platinum Trust's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.